If you are thinking about buying a house, you may have stumbled upon the phrase debt to income ratio, DTI, and that's what I'm talking about today. Hey friends, Mary Howard here with There's No Place Like Home NC, Red Boots Realty, powered by eXp Realty. And on this channel, I create educational content to help buyers and sellers while they are deciding whether to buy or sell a home. What I'm talking about today is probably one of the biggest contributors to whether you get pre-approved for a loan or not. In the simplest terms, your debt to income ratio is your monthly debt payments divided by your monthly gross income. So let's break that down for you. The way that you find out your monthly gross income is to find your pre-taxed income for the year. You divide that by 12 and you will get your gross monthly income. So for simplicity reasons, I'm going to use $60,000 a year for their gross income. Now we take $60,000 and divide it by 12. So that gives us a gross monthly income of $5,000. Now the second step is your monthly debt payments. In this category, we're only talking about the debt that is reported to the credit bureau. So this is not your utility bills or your grocery bills. This is just items that if you fail to pay, get reported and will affect your credit. So that's any secured or unsecured loans, such as your car payments or boat payment, credit card bills, student loans. Now we take your monthly minimum payments, not what you owe, just the minimal balance for each of these. And you add all of those up. So for this example, I'm going to say we have $1,000 a month in obligated debt. When you're talking to a lender, you're going to hear them say front end ratio and back end ratio. The front end ratio is all of your monthly debt, your obligations. The back end ratio is those same obligations plus the potential new house payment, the mortgage, and all the obligations that come with purchasing a home. There are different loan types that will allow lenders to vary in regards to what they can accept as far as these ratios. VA loans versus FHA loans versus conventional loans. And obviously, these are all dependent on your credit worthiness. In preparation for making this video, I reached out to Brandon Webb of Homestar Financial to make sure that as of this recording, the information that I'm giving you is accurate. So thank you, Brandon. He said right now, what's going on is with the FHA loan, if you've got good credit, the back end ratio can be as high as 54%. If you're going with a conventional loan and you have good credit, the back end ratio can be as high as 49%. But with bad credit, your baseline is going to be 41%. So a couple percentage points doesn't sound like a big deal, but wait, I'm going to show you how this really affects you. So for this example, we're going to use 45% as our back end ratio. The only way that you're going to know for certain is to reach out to an experienced lender that can look at your specific details, your credit history, and give you your correct percentage. This video is just a general working knowledge to help give you an idea of what's going on or what will be going on. So for this example, we know that our monthly debt payment is $1,000 a month and the gross monthly income is $5,000. And we take those two numbers, $1,000 for the debt, and we divide it by the $5,000 of the gross income, and that equals 0.20. In order for us to know that ratio number, we multiply that number by 100, and that gives us 20%. So this 20% is the example of the front end debt to income ratio. Now I'm going to use the 45% DTI for the back end ratio, and that's a good goal for when you're working this calculation out, because again, with good credit, that will be accepted by most lenders and most loan types. So our goal here with this house payment is to stay at or below 45%. Let's go ahead and factor in having a house payment. With these current monthly debt payments, that would affect this percentage, knowing that we need to stay under the 45%. So let's say you think you can afford $1,500 a month mortgage payment. So we add the monthly debt at $1,000 and the potential $1,500 a month mortgage payment. That totals $2,500 a month. If we divide that by the $5,000 of gross monthly income, that's going to give us 0.50. We then take that number, multiply it by 100, and that gives us 50%. So that's a little bit higher than that 45 that we want to stay at. So dropping the potential mortgage payment down to $1,250, add your monthly debt number, $1,000. Now your number is $2,250. Then we divide that by your gross monthly income of $5,000, and that equals 45. Multiply that by 100 and you have the magic number of 45%. In addition, if you have bad credit and you have to stay at that 41%, you have to drop your potential mortgage payment all the way down to $1,025 a month. That's going to be almost impossible to find a home in this market that's going to meet that criteria. So here's proof. You've got to have good credit. Also, something to think about, just because you can afford up to $1,250 a month for this example, does not mean that you have to go that high. You're the only person that knows your budget. Your lender doesn't know it, your realtor doesn't know it, so you need to make sure that all of these numbers are going to work for you as well. Just because you can go up to 45% does not mean that you actually have to. If you've made it this far in the video, thank you so much. Please consider hitting that like button below. It'll help me push this video out to help other people. If you have future video suggestions, please leave those in the comment section below. If you have any questions whatsoever about this procedure, please give me a call or message me at 704-560-0823 and I'll help clear anything up, or you can call Brandon Webb, the rockstar lender. His name and number is on the screen. Thank you again for watching. My name is Mary Howard and this is There Is No Place Like Home NC. Take care.
Thank you for watching this video. Click the link below to watch the next video. Don't forget to hit that icon bell to subscribe. This is Mary Howard with There Is No Place Like Home NC.